The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Elon Musk gets a big boost from Trump, and the stock market gets a big lift from Tesla. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick. And look what the cat dragged in. Well.
I'm back, you know.
Our official record counter is back here.
51 record highs.
Great to have you back, Alex.
Oh, it's good to be back. After 4.5 weeks, guys, what did I miss? Not a lot? Haha. 51 record highs on the S&P. The S&P is up by 0.4% off the highs of the session, but nonetheless, you have stocks sort of snapping that losing streak, particularly Romaine when it comes to the Nasdaq 100, in part helped by Tesla. Tesla making a run on the stock today, up 30 points for that Nasdaq 100.
Yeah, and the green that you see on your screen, a big difference from what we saw towards the end of last week. The market doldrums from last week really giving way to a bit of a sense of surety on this Monday. A resumption of that post-election rally that has Wall Street strategists upping price targets for 2025. Even Mike Wilson, the often bearish strategist over at Morgan Stanley, sees the potential for the S&P to end next year at 6,500. That would be an 11% increase from where we stand today. He has some company over at Goldman Sachs. Peter Oppenheimer and his team of strategists are forecasting total global equity returns of 10% through 2025. But don't etch those forecasts in stone just yet. Alex is going to show you in a second the wider than normal range of outcomes those strategists have around those price targets, given the still elevated uncertainty about what the new Trump administration will indeed look like. One thing, though, that is a bit more certain when it comes to the Trump administration is the potential ROI that Uncle Elon Musk stands to reap from the $119 million he poured into that super PAC that influenced Trump's candidacy. We're learning today from news reports that members of the president-elect's transition team, they've told advisors, prioritize a federal framework for self-driving vehicles, a priority that would directly benefit Tesla. Tesla right now, the biggest point contributor to the rebound in the S&P and the Nasdaq today, adding what is now a 40% rally since Election Day 2 weeks ago, Alex.
Yeah, we're off the highs for Tesla, but nonetheless, like I said, still adding 30 points to the Nasdaq 100. Let's get back to that Mike Wilson call that Romaine was just talking about. So here is their base case, bull case, and bear case for Morgan Stanley over for Mike Wilson at the S&P. The base case, 6,500, as Romaine was talking about. But really, it's this spread. The bull case could be close to 7,500. The bear case could be close to 4,500. That is a very big potential swing that we could see. Now, Morgan Stanley still sees that U.S. outperforming the rest of the world. They still like long quality stocks, and financials is the way that they want to be playing that. We've seen that over the last 3 weeks with financials really outperforming. But can we have a lot of conviction, Romaine, when that spread between bull and bear case is still so wide?
Yeah, that's a little bit more than what we call wiggle room here as we kick you off to the close here on this Monday afternoon. Stephanie Aliaga joining us right now, global market strategist at JPMorgan Asset Management. Great to see you, Stephanie.
Great to be here.
All right, look, we got to get right to it. I mean, we're sitting, roughly 5,900 on the S&P 500.
Yeah.
Higher than where a lot of folks thought we were going to end the year. And I know we still got a month and a half to go here. But everyone's already looking out to 2025. Have you actually taken a look at 2025? Are you ready to make a forecast?
Yeah, we've been hard at work on our year ahead investment outlook. And I think for us, it seems like the economy has now emerged from the kind of cyclical storm of uncertainties. You know, we're firmly in a soft landing. Growth is resilient. Inflation's on its way down to 2%, and the Fed is easing. But we are entering this kind of fog when it comes to uncertainty around policy, what this next administration will bring. I think for us, what we need to anchor ourselves around is just the direction of travel, and that remains very well intact, that the economy continues to grow, earnings growth is broadening out, and there are many other areas of the markets that can now perform better in the year ahead, and we're not only relying on just 7 companies in the index.
Well, let's talk about that, because that really was the market story, at least for the first 6 to 8 months of the year. We've seen a bit of broadening since then, not quite as much as some people would think. What do you think is going to be the leadership for this market over the next 12 months? What sectors?
I think tech will remain intact, but they're going to continue to kind of come to head with this attention on monetization. So I think the fact that expectations are so are elevated for those companies, could potentially lead them to lag, particularly relative to the last 2 years of performance. But what we're most excited about is just that other areas of the markets now seem to have the tailwinds behind them. So you just have growth being resilient, interest rates coming down. We're expecting them to come down a bit more, particularly on longer term rates, but that's helping other areas of the markets, particularly value. And then also some tailwinds from the election impacts, deregulation and tax cuts, which will also help other areas of the markets perform.
So is that a financials call? Because it feels like that's more the consensus, like the way to play that whole theme you just said, financials.
The outlook for financials does seem to be robust, or at least better than last year. I think on the regulation front, similar to many other things on the that are being talked about from this next administration, we don't know yet what deregulation actually looks like, and we don't know what the magnitude of that is. And particularly in financials, where it's a very differentiated landscape, there's a lot of smaller regional banks. Does lower regulation actually help competition amongst them? And so there's a lot of questions you still need to answer, but it does seem like that the outlook there is looking a bit better.
Does that extend to, say, small caps and mid caps also?
It does. I think that earnings growth, particularly there, that is expected to be quite robust next year. And earnings there was really in the doldrums for the last 2 years, particularly relative to large cap tech. So we do think that small mid cap have more room to perform here, and particularly because their valuations just haven't risen as much as large cap tech either. So there's more room for upside.
Is there a case to be made at all for U.S. investors to actually look outside the U.S.? There's been a lot of talk about American exceptionalism when it comes to financial markets, particularly in light of the administration that's going to be coming into power that most people seem to believe is going to be very market friendly.
Over the long term, we think there's a lot of growth happening globally, not just in the United States, and particularly where expectations are much lower and perhaps the upside is elevated, and there's really exciting structural themes, particularly in Japan and in India. Mm-hmm. In the near term, I think we had expected the dollar to weaken next year, and now it seems like the dollar will be biased higher with the balance of policy and U.S. growth and this theme around U.S. exceptionalism. So in terms of just beta exposure, the rest of the world seems a little bit more challenged than what we initially thought. But with that said, underneath the hood, we do think there's a lot of opportunity, particularly in some of these secular themes like AI, technology, healthcare.
When you sort of look ahead into 2025, and particularly through the lens of what government policy is going to be like, are you going to pay more attention to the White House or more attention to the Fed and Jay Powell?
Ooh, interesting question.
Interesting question. For the last 2 years, we've really only looked at the Fed, right? Mm-hmm. Monetary policy has been squarely in focus. And now investors have to really take issue with the direction of fiscal policy. It seems like monetary policy in the year ahead will be gradual. The Fed is lowering interest rates. There's a lot of questions around where the neutral rate is. Maybe it's more elevated relative to history. But the uncertainty there seems a bit more muted relative to the past, particularly because now inflation is back to 2%. So it seems like fiscal policy and the focus around there will very much be in the driver's seat for the next year.
So how do you then diversify? Do you go into Treasury market in the long end if we're sitting around 4.5? Is it going to be crypto? Is it going to be gold? Where's a good diversifier for you guys?
I think first you have to see where your exposure is. And for most investors that are sitting on portfolios that have enjoyed the last 2 years of incredible performance, chances are you have an overexposure and overweight to large cap tech companies, particularly just a few companies. So I think diversification takes many different forms and flavors, and it obviously depends on your own needs. But I think you can look to diversify within equity markets now that other areas of the markets are set to perform better. Mm-hmm. Diversify into fixed income, various parts of the curve. I think long-term rates will remain pressured given the current macro backdrop. But there are that diversification offering there, and then also private markets and even other real assets that can help buffer portfolios right now.
All right, Stephanie, great conversation. Great to have you here on The Big Show. We'll talk to you again soon. Stephanie Aliaga, global market strategist at JPMorgan Asset Management, kicking us off to the close here on this Monday afternoon with a closer look at Bitcoin, trying to rebound from this weekend's sell-off, hovering right now right around that 91,000 level, and a lot of folks, Alex, looking to 2025 and beyond.
Oh boy. All right, well, Bitcoin not the only thing booming. We told you about Tesla's rally at the top of the show. We're going to sit down with the company's former president, Jon McNeill, now CEO of Dvx Ventures.
And a closer look at retailers. Walmart kicking off a slew of results from the consumer sector. A breakdown of expectations of what happened last quarter and, more importantly, what could happen in the holiday shopping season ahead. Hint, hint, Alex. This is The Close on Bloomberg.
I don't necessarily think the dollar needs anything to back it up. To need to back up the reserve currency is counterintuitive. And so, again, listen, if we get the Bitcoin reserve, and as a guy that owns a lot of Bitcoin, I will not cry. And if you see me crying, there'll be crocodile tears. I think Bitcoin heads to 500,000.
That was Mike Novogratz, the billionaire head of crypto investment firm Galaxy Digital, with some pretty bullish calls on crypto. Bitcoin now trading up over $90,000. Here to discuss more is Anthony Pompliano, the CEO of Professional Capital Management. Anthony, thanks for joining us. It's a pleasure.
Thanks for having me.
So are you just as bullish as Mike Novogratz? I mean, yes, he's talking his book, but like, what do you think? What kind of upside do we really see under a Trump presidency?
Well, I think there's two stories here. One is Bitcoin in the future without a Bitcoin strategic reserve, and one with that Bitcoin strategic reserve. The interesting thing, though, is other countries now have heard President Trump say that he's going to go buy Bitcoin, and they're now coming out saying, no, we're going to beat you to it. You know, there's still 2 months before President Trump actually gets into office. I think that's a big deal.
What are the two scenarios then, with or without the SPR for crypto?
I think that Bitcoin will go to low hundreds of thousands without the Bitcoin strategic reserve. If the United States kicks off a global race for countries to start buying this, the interesting thing about Bitcoin is the higher the price goes, the less risky it gets. That's usually not true. Usually in the stock market, the higher a price of stock goes, people get nervous. Could it draw down? What's the issue? Bitcoin started out at 0. And so most investors would say, hey, it's too small. I can't allocate to that. But now that it's 1.5 coming in on a $2 trillion asset class, now these large pools of capital say, wait a second, now this is an investable asset. I can go start allocating to this thing. And so the higher the price goes, the less risky it gets, which means that now we have countries, sovereign wealth funds, and central banks that are yet to still start buying.
Let's take the reserve out of the equation for just 1 second, because I am curious about the regulatory side of this. A big sort of complaint in the crypto community was the fact that they didn't get clear direction and regulation out of the SEC or CFTC, whoever the heck was supposed to be in charge there. And the potential regulations they were going to get were probably too onerous. That risk is removed, right? We pretty much know whoever's going to be running the SEC, the Treasury, CFTC, probably going to be a little bit more friendly. But there are no real regulations in place. So what can they do to make things friendlier, if at all?
Well, one of the interesting things is the U.S. dollar is not regulated either, right? It's an inanimate object. You can't put rules around it, you can't throw it in jail, and you can't find the U.S. dollar. It's a physical or electronic piece of technology. Bitcoin's the same way. What is regulated are the people or the companies that go and transact in, support, hold these assets. And so I think that's really the question. But the nice thing about Bitcoin is it's not controlled by anyone. It's this decentralized network. And so anyone in the world can buy it regardless of what the regulations are. Now, the companies, though, that are needed to actually help support this is where a lot of these questions are. And what I think is really going to end up happening here is we're going to say that Bitcoin is a monetary asset. That asset is treated very differently than all these technology things, because ultimately Bitcoin isn't fundraising. Bitcoin isn't trying to elicit anything. It doesn't have a marketing team. It doesn't have an executive team. There's no board of directors. These other assets, the question is, who is centralized versus who is decentralized? And I think you're going to see very, very different rules on that side.
So this is that's a good analogy to use, because we talk about sort of one side of the crypto equation that pretty much is just, as you said, an inanimate object. But some of the things you were referencing were obviously the actual products that people were creating that, to one extent or another, the government had issues with here. Is that still going to be two separate lanes of traffic, or are those going to merge?
I think the big thing that all regulators are trying to figure out is how do we ensure, if the public is putting money into this, that it is somewhat safe, sound, et cetera. Now, one of the interesting things is there's many examples where people operated within that regulatory environment and they still committed fraud, et cetera. So it's not a perfect solution, but it's better than not having a solution. And so on this side with the crypto stuff, I think really the key piece here is if you're going to go out and you're going to fundraise from the public, there's got to be some set of agreed upon rules. And I think the big important part here is that the industry and the regulators didn't see eye to eye. Now, the nice thing is that we have a court system. And so the industry hired a bunch of lawyers, the regulators hired a bunch of lawyers, they went into a court system, and they argued it out. And so far, it seems like the courts are siding sometimes with the industry, sometimes with the regulators. Mm-hmm. And I think that, unfortunately, is going to be the path to actually getting the regulation, is it's going to be through the court system, because these two sides can't agree. Maybe that changes with new regulatory heads, but that's unclear until we see who those choices are.
So let's go to sort of who's going to be leading all this charge. What do you think about SEC pick? What do you think about Treasury pick?
so far, I think that Donald Trump and his current administration has made a very clear kind of mandate that anyone who is going to work here is going to be crypto friendly. We have somebody who is the first pro-Bitcoin president to go into the White House. He owns Bitcoin. He's supporting Bitcoin. He explicitly promised on the campaign trail he's going to protect Bitcoin and protect people's right to self-custody of Bitcoin. And so I think that when you look at these different choices, it's all going to be good for Bitcoin. Right? I haven't yet seen somebody who has been suggested as a candidate for any of these roles that I'm like, oh, that person would be really, really bad for Bitcoin. Mm-hmm. And I think that in itself is kind of the 0-1 win, because I don't think you could say that for past administrations. And so now we have kind of all candidates are going to be pro-Bitcoin. And really, I think that that's why you're seeing so many corporates come in, start buying Bitcoin. You're starting to see Fidelity, BlackRock, Franklin Templeton, et cetera. Everyone is now saying it is time to go buy Bitcoin. And that is a global race.
Now, you interviewed Howard Lutnick in a podcast at the end of October, so before the election, but just a few weeks ago. What do you think? Like, you think he's going to get Treasury Secretary? Like, would he be status quo? It feels like he would be the non-status quo candidate.
I think that Howard is, one, incredibly intelligent. Two, if you're going to be the CFO of the United States, and if you listen to that podcast, what he talks about is using the country's balance sheet to generate revenue in a way that can actually help us cut taxes. I think it's a very novel idea. It's something I hadn't heard before. And so having somebody who knows how to make money is probably a pretty important thing if that's going to be your strategy. And then the other thing that I can speak specifically to Howard that I think is really interesting is he's a family man, and you want somebody in government who can handle crisis. You want somebody who can handle kind of uncertainty. And understanding his story around 9/11 is one of the most powerful stories of resilience that I know of in American business history. And so I think that people hear that story and they say, hey, this guy would be a really good pick. Now, I don't know many of the other candidates, but from everything that I've seen online, they also would be really good picks. And so in a weird way, people want to position this competition between, Lutnick and the other candidates as like some sort of like house of cards. There's a bunch of backstabbing, et cetera. Maybe that's going on. Maybe it's not. What I tend to think is that there's so many good candidates for President Trump to pick from that he's trying to get it right and make the perfect pick. And so let him take his time. Right? Let's not rush it. This is going to be a really important role. Obviously, markets are very interested in who's going to run the Treasury. And so let's see who ends up being the right pick for Trump and his administration.
All right, well said. I'm going to leave it there. Anthony Pompliano, CEO of Professional Capital Management, a closer look at the crypto sphere with Bitcoin back, floating with 91,000 once again. And one of the potential beneficiaries of the crypto boom could be Robinhood. At least that's according to our next guest. We're going to talk to an analyst upgrading the stock on the potential changes that the SEC, that could be a positive for Robinhood. That's coming up next. It's part of our top calls. This is Bloomberg. All right, let's get a view from the sell side. Top calls, big movers on the back of analyst recommendations. And we start off today with Redfin. Goldman Sachs becoming the latest firm to give the real estate brokerage a sell rating. The analyst said Redfin's valuation unattractive and finds downside to EBITDA estimates. Analyst also says stagnant existing home sales could pressure agent commissions and lead Redfin to change or reduce its take rate shares. Having an awful day, down about 4% here on the day. Next up, CVS getting a boost to overweight over at Wells Fargo. The analyst saying the boo-boos from the company's rocky growth strategies for the Aetna insurance unit likely peaked, and that creates a compelling investment opportunity. And with that red sweep in the U.S. election, the analyst says the risk reward on Medicare Advantage looks better under the Republican leadership. And let's end things today on Robinhood, an upgrade to buy from hold over at Needham. The price target at 40, a victory for Trump is a victory for Robinhood. At least that's the analyst's view. Robinhood will likely launch new crypto assets once Trump's pick for SEC chair settles in. He also expects an influx in retail investors following the company's investments into meme products. Those shares up about 9% on the day, having a really phenomenal year, by the way. And we're pleased to say that the analyst behind that call joins us right now. Jon Todaro is senior research analyst over at Needham, and a stock I just had to do a double check, tripling here in 2025. And you obviously see more room for this to run. Do you think, genuinely speaking, that if there is a broadening of this crypto rally, that feeds through into Robinhood?
Definitely. And in particular now, after you're going to get the SEC changes, and that's because Robinhood will be able to come out and launch a lot more crypto products. So we do think if if you get a broader bull market in crypto, which it looks like you are, you got Bitcoin at all-time highs, you have retail investment coming back into the space.
Yeah.
We think Robinhood should capture that pretty well.
Yeah. So, John, I'm just going to read a couple of headlines to you that are just crossing the Bloomberg terminal. I know you haven't had time to see them. The first here is that the Trump administration is said to be meeting with Brian Armstrong, of course, who leads Coinbase, to discuss administration appointments. There's a second headline saying that Trump's Truth social media platform is in talks to buy the backed cryptocurrency company here. These are obviously two reports coming from two different sources, the Financial Times and Wall Street Journal. But I am curious your thoughts about what most people view as going to be a very friendly, much more friendly administration to the crypto sphere.
It is. And those headlines point exactly to that. And I think what people might be missing is this is a big leap from the prior administration, because you're not just moving from an administration that was neutral to now pro-crypto, or one that was anti to a neutral administration. You're moving from one that was, in our view, somewhat hostile towards crypto or anti-crypto or just more restrictive on crypto, to one that's actually quite pro-crypto. So I would call it almost two turns of the wheel in terms of regulation. Obviously, the most pro-crypto administration we've seen since Bitcoin was invented.
Well, also the headlines also show that there may actually be action, and it wasn't all just talk. Why would Robinhood be sort of the beneficiary to that? Why would that be a one-stop shop?
So Robinhood has a lot of low-hanging fruit that they can go out and capture. So unlike some of the other cryptocurrency platforms that kind of tangled with the SEC and went out and launched a number of products, Robinhood played a little bit more by the books and had a much more diminished crypto offering. So one, we think they're just going to go out and launch a lot more products. And given their customer base already, there's some low-hanging fruit where they can go out and grab. And then two, what we think is actually really interesting is meme trading within crypto. So we all remember Robinhood in 2021 with meme stocks, GameStop and AMC. Robinhood's bread and butter, if you will, is meme assets in our view. And so if these meme crypto assets become a broader part of crypto, we expect Robinhood to do well. And those assets are pretty lucrative. So meme crypto assets, they're traded about 3 times more than large cap assets like Bitcoin. So there is a lot of volume that Robinhood can participate in, and we think they'll offer attractive products to retail within that segment.
Real quick, John, does that mean more volatility though?
Yeah, you're likely going to see more volatility, and that's good for the exchanges, at least near term. You know, that's good for Coinbase and Robinhood, but I would expect a lot of volatility. Crypto is going to be inherently volatile for some time until the asset class matures a lot more. So I think that's probably next cycle where you can see dampened volatility. So for the next 2 years, I think it's fair to kind of expect continued volatility in this space.
All right, John, thanks a lot. Really appreciate it. Jon Todaro over at Needham joining us on his call on Robinhood. And just to reiterate those headlines Romain was just talking about, Trump Media and Technology shares spiking after the FT reports it's in talks to buy crypto firm Bracket.
Absolutely, and also a bit of a spike in Bitcoin itself here, up about $1,000 just in the past few minutes.
Oh, okay. Well, that's a movement there. Coming up, from financial crisis to financials to electric cars, we're going to talk to the CEO of Dvx Ventures.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romain Bostick.
And I'm Alex Steele. That looked like a really pretty day, by the way.
I know, it's a pretty day. Is it warm out?
I don't know. I'm always cold. It's hard to say. All right. Well, what's not cold is the rally in equities.
You're wearing a sleeveless dress in November.
They tell me what to wear. They tell me what to wear. All right. We're taking a look at the markets. They're also on the upside here, but in part remained by Tesla. And one of the reasons why Tesla is doing really well is because of reports that potentially the Trump administration will seek to ease the federal framework for fully self-driving vehicles.
Yeah, and this has been the parlor game really for the last couple of weeks. Which industries, which companies are going to benefit most, of course, from a Trump administration that takes power in January. And of course, the man who poured about $100+ million into helping Trump get elected and affectionately referred to as Uncle Elon now, because apparently he hasn't left Trump's side since the election. A lot of people betting that Tesla will be the big beneficiary if those automated driving rules are eased.
Yeah, Dan Ives said the AI and autonomous opportunity is worth $1 trillion alone for Tesla. He's bullish, no surprise. All right, joining us for more on this is Jon McNeill. He's CEO of VC firm Dvx Ventures. He's also former president of Tesla and the former COO of Lyft and board member of GM and Lululemon. Jon, quite a resume, and it's great to get your perspective on this. Do you think it's realistic for the federal government to really sort of unleash autonomous driving in a concise way and not like 10, 20, 30 years down the road?
I think the market has been waiting for the federal government to act. The states and local governments have sort of handed a hot potato to the federal government in this current administration, and they've asked for new rules or just rules to be defined on autonomous cars. Today, for instance, you can't put a car on the road that doesn't have rear view mirrors and side mirrors. Obviously, autonomous cars don't need that. But you need the permission of the government to put more than 2,500 of those on the road. And so we have been waiting for years for the federal government to define a new version of a vehicle that would be legal on public roads. And I think the whole autonomous industry is really excited about the possibility of this finally happening with the right transportation department policies. And I don't think it'll take long. And to your point, Alex, it can be concise.
Well, what's so odd, though, is that on the flip side, potentially the Trump administration would revoke the subsidies for EVs if you buy them. But then on the flip side, you might have AVs. Does autonomous driving help EV sales? Like, are the two linked from that way?
They are linked because you need power to run the computers that are on an autonomous car. And the most efficient form of power to run those computers is in an electric car. Electric cars can go hundreds of thousands, if not more than 1 million miles. And so they're really well suited for AVs. And so these two things do go hand in hand.
So this gets us to the question, though, when we talk about adoption and exactly who is going to sort of adopt this. Just kind of explain, is this going to be primarily go through, I guess, either the ride-sharing companies or more, I guess, corporations, if you will, making decisions about whether to have fleets of automated driving vehicles, or is the demand going to be driven more from the consumer side, meaning people like you and me who are looking for a ride?
I think the answer to your question, Romaine, could be both. Imagine as a consumer that you could have a car that would essentially be your chauffeur. It will drive you to work. It'll drop the kids off at school. It'll pick up groceries for you, take you to dinner. The demand for that commute is in the same hours as the demand for rideshare. So I think what that means is we're going to see demand for consumers to have their own, and we're going to see fleets created for rideshare so that rideshare commuters can also have access to AVs. And so I think you're going to see demand from both sides of the market as a result.
I am curious about the current state of affairs right now when it just comes to investing in this space and really more broadly in the tech sector. Alex listed your long list of companies that you were affiliated with. You're now at Dvx Ventures. I know you're still invested in this space, but you have a lot of other companies as well in the tech area that you're investing in. What is that environment like right now with regards to price discovery, with regards to raising money, and just overall investor appetite in the VC space?
I think we've just seen in terms of autonomy a big round that Waymo has just raised with their current investors like Sequoia and Andreessen coming in. And I think overall in the VC space, there's, of course, a lot of attention on AI. And then the derivatives or second order effects of AI, things like AI data centers and the tech that goes into those, the power sourcing for AI data centers. And we're lucky at this time because most investors really only get to see a single super cycle at a time. The last 30 years, we've seen one, and that's the internet. We're now in the midst of maybe 4. You've got the AI super cycle, you've got an electrification super cycle, you've got a robotics super cycle, and a biotech super cycle, all happening at the same time. And so from the earliest stages of investment on through to growth and then public, I think you're seeing a lot of activity in all of those stages. And that activity level has definitely picked up post-election.
And speaking of, you just completed a raise over at DVX, $100 million in all. How quickly do you think you're going to be able to deploy that money, and kind of where are you looking to do that?
We actually deploy slow on purpose because we invent these companies from scratch. We're a little bit different than typical venture in that we only work on our own ideas. We're kind of an idea guild first, and then we build products and then build companies out of those ideas. They're along major themes, no surprise, like AI and robotics and clean tech. But we go slow, and we try to be very capital efficient. That's why we've only raised $100 million. There's a lot bigger funds being raised these days. but it's because we go methodically through the builds of these companies and are excited about a lot of spaces people are excited about. But we want to be at the very front end of the company invention process.
Well, I want to ask you, too, about one of the overarching things that might affect some of your companies, and that's the supply chain. And I know you have some investments specifically in companies like Atomic that are designed to address this. But with the new administration coming in, I'm sure you know there's a lot of concerns about tariffs and what type of goods are going to be able to flow cross-border. And whether you're talking about electric vehicles, some of the autonomy, renewable sources of energy, a lot of these things are still dependent, at least on certain parts and components that are probably going to have to come from outside our border. Is there preparation for potential disruption of that? Can the industry handle that?
It's a really good question, Romain, and that's exactly what our company Atomic works on. We grabbed the team out of Tesla that had to solve a really difficult problem every week, and that was 10,000 parts coming from 72 different countries into a factory to meet a car within 20 minutes of production. It's a really difficult problem to solve. It's likely going to get more difficult, not less difficult, if we have a more tariffed environment. And so we, alongside other venture capitalists, are putting money into the supply chain technology to really help companies prepare for this, to make sure that they don't see an interruption in their supply chain that causes an interruption in the product that they can offer into the market.
All right, Jon, cool stuff. We're going to check in with you soon, I'm sure. Jon McNeill is the CEO over at Dvx Ventures. A closer look at what's going on in the world of automated vehicles and autonomy overall. And of course, he talked about all these inflection points right now, whether it's biotech or real tech or this tech or that tech. But you want to know something, Alex?
Tell me.
Tech actually isn't hiring right now. There's a great story by Business Insider today saying that hiring in the technology space is down 27%.
So what do we make of that? Like, is it just them trimming down and they just overhired like during the pandemic? Or is this like a retrenchment, or are people just being asked to do more stuff in the job that they do have?
Well, they seem to link this to that sort of great resignation when, they were having trouble finding workers. So if they can find one, they grabbed him or her and held on to them tightly. And the idea is that some of these companies basically over-index. They ended up basically with too many employees. So there seemed to suggest this is a little bit more of a right sizing. But the idea, though, right now, if you're looking for a job in the tech space here, slim pickings.
And also, then, like, where do you go?
Like,
what other options do you have if you're used to working in the tech environment, or you take a pay cut and then you sort of make do?
Yeah, well, that's what, they have a great anecdote for somebody, a guy who's very experienced, been working in the industry for 30 years, looking for a new job, been on dozens and dozens of interviews and no offers yet.
Oh, it's so painful.
Yeah. All right.
Good thing we work in media.
All right, I'm depressed now, but don't worry. We're going to perk back up here and keep the show going on because turbulent times have returned, not just for the media, but for Spirit Airlines. Shares of the stock, of course, taking a major hit after the airline filed for bankruptcy, but Spirit saying, please, don't go anywhere. We're going to work through this. It's our stock of the hour. We'll discuss next, right here on The Close on Bloomberg. Welcome back. We're taking a look at right now shares of Spirit Airlines halted at the moment, but they were down more than 90%. This after the company filed for Chapter 11 bankruptcy protection, trying to restructure about $1.6 billion worth of debt. Isabel Lee joining us right now to help walk us through the contours here of what we learned. An airline, of course, that was struggling, an airline that had a lifeline with JetBlue, and that lifeline, of course, blocked by regulators, and now here we are. Chapter 11 protection, though the company's telling customers you can still book and fly.
That's the biggest kicker, but here we are. It's really amid all the mounting losses and the failed talks. Remember, it made headlines when a federal judge blocked the takeover of JetBlue, or when talks with Frontier really just failed to pan out. And a lot of people credit that as the kicker to this demise. But Spirit really tried their best. They had rock bottom fees during the summer season to really entice customers, but they charge everything from printing boarding passes to coffee to everything, but it didn't really work out.
Yeah, for coffee.
Everything. Printing boarding passes.
You print your boarding passes?
Well, first of all, no one does that anymore, right?
I do.
You do. Oh, that's real cute. But, I mean, the coffee thing, that would really upset me.
So it didn't work out, but to your point, they said that please feel free to still take our flights. They will operate as normal. They expect the process of the bankruptcy filing to continue early next year. But even if some saw it coming, it's still a little bit of a shock. And to your point, 93% of the stock is what lost and erased this year. But the company has been posting annual losses since 2020. So
So it's not just about COVID, like there was clearly other issues as well. And as you had business class customers stop flying during COVID, then you had Delta, say, United and American all lowering their fares, which then trickled down to the discount guys. Here's my question. Once they get out of bankruptcy, though, we have a different Trump administration. Yeah. Does that mean we're going to see the resurgence of a JetBlue Spirit deal or a Frontier Spirit deal?
Could be. I mean, this administration has looser regulations, softer policy stances against that. So maybe because under this regime, under the Biden administration, the Lina Khan's agency has been a little stricter, but it could open that possibility in the future. But the whole thing comes ahead of Thanksgiving season, which is really tricky, and many are expecting it to be a record flight.
Yeah, and you wonder if Spirit's going to be a part of that. But it gets to the issue too, just on the acquisition side and the JetBlue thing being bought. If they're in bankruptcy protection right now, we know how this goes. Usually somebody comes in and tries to buy up the assets. So I don't know. I mean, would there be more of an argument for an airline like to come in, i.e. JetBlue, and say, want to buy? I mean, what's the regulatory argument against it right now? It's either we're going to let this company fail and not let you buy it.
Exactly. Or we have Bloomberg's Thomas Black saying that a Frontier deal would make more sense because those two are the low-cost carriers. So it will be an economies of scale. You know, you can compete with the big leagues, but it remains to be seen. But for now, it's really a little surprising. Like I've been reading headlines over headlines. And on the human side of it, they employ over 13,000 people. So what will happen to those?
Spirit Airlines, of course, shares still halted, though, basically trading as a penny stock in bankruptcy protection. Our stock of the hour, Isabel Lee, we thank her here. As we count you down to these closing bells, a mixed bag on Wall Street, green on the screen for the S&P and the Nasdaq. So a little bit of weakness right now in the Dow indices, including that Dow average and Dow transports.
Yep, and we also have earnings, of course, coming out over the next couple of days as well. Shelby McFaddin is an analyst over at Motley Fool Asset Management. She'll be joining us next with her take as we head into Walmart tomorrow. This is The Close on Bloomberg.
Most investors that are sitting on portfolios that have enjoyed the last 2 years of incredible performance, chances are you have an overexposure and overweight to large cap tech companies, particularly just a few companies. So I think diversification takes many different forms and flavors, and it obviously depends on your own needs.
Stephanie Aliaga there over at JPMorgan Asset Management, kicking us off to the close just about 50 minutes ago. Alex, a big turnaround, a modest turnaround, let me say. I don't want to overstate it here. But last week, it was kind of in the doldrums. I mean, the market really wasn't feeling it. Get a little bit of action today here, up about 0.6% right now on the Nasdaq. And of course, that's largely because of Tesla.
Yep, Nasdaq 100 really erasing those sort of 5 days of losses. Now we're on the upswing for that 6th day, as you mentioned, because of Tesla. But also the Russell hanging in, mid-caps hanging in, not outperforming or anything, but definitely hanging in on this. Energy, one of the top performing sectors within the S&P.
And I just want to throw in what's been going on in the crypto sphere. We did see Bitcoin rally back above 92,000. Coinbase up about 7% and back. That's the company that runs the crypto currency of the same name. Halted now, but at one point it was up 162%. That on the reports coming out of the FT and the Wall Street Journal that Truth Social, that's Trump's social media company, is considering buying it. So another headline too, also with Brian Armstrong of Coinbase apparently going to be sitting down with Trump for a private meeting to discuss his administration. So a lot of tailwinds for the crypto sphere right now as we move closer to the closing bells for U.S. equity markets. Shelby McFaddin joining us now around the desk, senior analyst over at Motley Fool Asset Management. All right, Shelby, I'm sure you've been looking at the sort of Trump trade, if you will, the rally that we've had over the last couple of weeks, maybe a bit of a reset over the last couple of days. But right now, folks are looking at, I guess, the potential policies that they think this administration will bring, and they're finding a lot of winners out there. Yeah. Have you adjusted?
Well, as a team, we sort of have to come with it as it goes. So at this point, we know that the policy hasn't come in yet, right? So then there's also the lag for the implementation. So at this point, everyone's just sort of speculating on what we think might happen. The biggest crux of it is probably going to be deregulation and taxes. So that's something that I remember calling a meeting on November 6th and saying, let's talk. Because we wanted to figure out as a team, what might he do? What might he try? What was campaign and what is president, right? So what is actually going to be proposed? And a lot of that doesn't get implemented until next year. So we're not too keen on specifically chasing something, but very aware of the fact that each one of our names could benefit from something as simple as the way that R&D is going to be expensed going forward if the sort of tax plan gets renewed, the way that corporate tax rates are going to look. So if we've got a small small cap company that's just on the edge of positive earnings, that changes the picture a lot for them.
Okay, so not chasing, but certainly keeping an eye on it. What are you embracing right now?
You know, at this point, we still really like small caps. That's something that hasn't gotten a lot of love. So when I hear Russell 2, I go, keep it going, you know, push it up, right? But seeing some of the small caps get a little bit of love from deregulation, I have to say, just from a capitalist point of view, you love to see it, right? We are continuing to look at benefactors of bipartisan legislation. So that sort of
there's not bipartisan legislation.
Well, think about it. The industrial space has been something that actually both sides have really agreed on. So when we first sort of thought about, oh man, like, is there going to be a decrease in capital projects? What's going to happen to all these grants from the IIJA? When we actually sat down and did the research, we found that there was not much to gain from either side tearing any of that down. The United States still has an absolute backlog of roads and bridges that need replacing. So that's a place that we are still interested in playing in.
And some of those shovel projects are also in red states or purple states. So that also raises that question as well. We also, just like in the here and now, we still have earnings this week. I mean, I have to be back for NVIDIA Wednesday. Yay. Walmart's tomorrow. Then you have TJX. You got Gap. There's a lot of retail earnings coming out this week. Let's start with Walmart. Do you like it? What do you think we're going to get tomorrow?
You know, at these valuations, I have to say, not excited about the price, right? But the actual stock, yes, we do still love it. Because when you think about it, they have been very dynamic with pricing. They've been able to meet the consumer where they are, and they're the nation's largest employer. So we know that there's that sort of sweet spot when it comes to any sort of economic policy that might be affecting these really large retailers. They've also positioned themselves really well for a softer, lower-end consumer going into a peak holiday season where there are fewer shipping days. So now you're realizing, you know what, we're a little bit crunched when Black Friday starts. I might just go to Walmart. And so individuals might be sort of leaning more towards that stocking stuffer sized gift, grabbing a lot of those things on a sort of Walmart treasure hunt. There's a really good opportunity there for the peak holiday season.
Does the Walmart extend to like Kohl's, to TJX, to Target, for example, or is this just a Walmart play?
I think when we're looking at that sort of retail, it is more of a Walmart play because of the sort of staple type nature compared to some of their competitors. So when we're looking at Target, it is still some staples, but you're starting to get a premium step up. When you're looking at TJX, you're really getting into discretionary now. So that is sort of where you start to see a little bit of a step down where someone might go if they're looking for more of that designer feel and they're saying, well, I can get it more affordably here. But if you know that you have a retailer that's got a lock on staples, then they're more likely to be able to secure the consumer for discretionary as well.
So you seem to have a relatively positive view right now of the consumer and of the economy overall?
Yeah, generally speaking. I mean, we have seen coming from the banks and some of the other financial institutions that the lower end consumer still might have a little bit of a way to go, but knowing that a lot of the spending is represented about 60 to 70% of that middle to upper tier, and they've pretty much stabilized, with the credit card companies telling us that lower end is not depending on credit too much because they're not wanting to get far out of their depth. That's a good sign to me. I would much rather see households going ahead and just using the cash that they have than stretching onto credit cards because it just sort of sets the economic environment up better instead of having a huge reliance on credit. Whereas middle to upper income using credit a little bit more to get those advantages, and they are still making those payments pretty much on time.
What else do you like right now in the space that you'd be playing over the next few months?
Yeah, the other thing we'd love to see come back was UPS, and it seems a little bit boring, but it was exciting to see the full circle of that come around after the sort of devastating hit that they took from the Teamsters negotiation. But what they did was they showed us what happens when you've got active operators at the top chasing on after actual quality of assets instead of just volume. So that's in our large cap product. Walmart is in our TMFC, our Motley Fool 100. But UPS has been a really strong player in both our core SMAs and our dividend products.
All right, I like UPS. Shelby, great to have you here as always. Shelby McFaddin, senior analyst over at Motley Fool Asset Management, helping us count you down to the closing bells. Those bells right now, just about 3 minutes away. Stocks are pretty much where they've been for a good portion of the time. But kind of interesting too, Alex. You've been gone for the last few weeks. I don't know if you saw what happened in the yield space here. We had this huge groundswell in yields up higher. You know, remember, they're supposed to go lower. I don't know what time when you left, but remember Jay Powell banged the desk. He said, look, we're getting a lot of rate cuts this year, and well, we only got a couple, and maybe we get one more in December, but the market is kind of off that.
I love that you brought this up because when I left, it was like 3.6%, and it was like, that's going to stay around there or go lower. And then I blink, and all of a sudden, it's almost 4.5%. And you're like, well, of course the money is going to continue to go into money market funds, $7 trillion. Why wouldn't it now if you're near 4.5%?
Yeah, another record. And I mean, I'm still getting emails from, my various savings accounts basically talking about my rates. But the ones I love is now they send you what your rate's going to be, and then they compare it to all the other banks out there. And they say, look at this pittance you're getting from Bank of America or Wells Fargo or something. All right, we are moving closer to the closing bells. Full market coverage of all today's actions now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Alex Teal, taking you through the Closing Bell, a global simulcast. It starts right now. We're joined in the TV studio by Scarlett Fu, in the radio booth by Carol Massar and Tim Stinovic. And hey, look at that. The gang is all back together. Aww. Carol, I know you like to make this show all about you, but I think we have to acknowledge the return of the prodigal daughter, Alex Teal.
We are so happy to have her
Welcome back, Alex.
Good to be back, guys.
We have missed you. We have missed you. And haven't you missed Romaine using the word pittance? I kind of love that.
I always miss Romaine, of course.
Having said that, looking at a day where, we've got a bit of a rally and pretty broad-based, very different from the tone last week. But, I feel like earnings are going to shape, especially NVIDIA earnings might shape.
Yeah, I was going to say it kind of
this week.
I think Wednesdays after the market, NVIDIA, that's what everyone's focused on. We also hear from retailers this week, including Walmart, among others, so get a good read on the consumer. So we're not done yet with earnings season and going to get a good view into quite a few different areas of the market.
Yeah, NVIDIA has become like a big event in the same way that the FOMC decision or the monthly jobs report has become a big event. There are watch parties devoted to it, so we'll be all over those results.
Wait, there are watch parties?
Yes.
Yeah.
Aside from us?
I didn't get an invitation.
At
That's
bars.
because we are on air. They actually, guys, they actually played us at a watch party.
Yeah, they
did. Yeah.
Joe Weisenthal.
This is totally new information for me.
Yeah.
But apparently, options are just implying, like an 8% move to the up or downside for NVIDIA. Isn't that slightly less, I think, than normal?
Yeah, I mean, definitely some of the bloom has come off the rose. We should point out today here, when you look at the markets, the biggest drag right now on the S&P 500 is NVIDIA, believe it or not, down about 1% on the day, while Tesla, of course, leading to the upside. The net effect of it all is an S&P 500 that looks like it's going to close out the day higher by more than 20 points, or roughly 0.4%. The Dow Jones Industrial Average not participating in the rally today. It's going to close lower by roughly 50 points, or 0.1%. The Nasdaq Composite and Nasdaq 100 each higher by more than 100 points, 0.6% on the Nasdaq Composite, and the Russell 2000 squeaking in with a modest gain of about 0.1%.
Just going to say, don't cry for me, NVIDIA. It's up more than 180% so far this year. As for today, the S&P 500, Scarlett, most names are higher, 320 to be exact, 182 to the downside, 1 unchanged.
Yeah, given how modest the actual advance in the S&P 500 is, when you look at the sector performances, it's green all around. Only one sector in the red, that is industrials, losing about 0.2%. But everything else is green, led by energy and communication services, each up at least 1%, and REITs are gaining about 0.9%.
All right, guys, I'm going to the names that really dominated the S&P 500, the Nasdaq 100 today. These are among your top gainers. Supermicro.
You're just sticking with the S&P, is that?
No, and the Nasdaq 100.
Okay.
Does that work for you?
Thank you.
Okay.
I think it's kind of overlap.
Here
sure.
too, please. Okay.
Right.
Well, I believe in overlapping. All right, so let's get to Supermicro, guys.
Welcome back, by the way, Carol.
Thank you very much. I missed you. I had Romaine-itis. I didn't know if they told you that. That's why I was actually home.
Is that a good thing or bad thing?
Well, it's not a great thing. All right, Supermicro Computer. It is your number one gainer in both the S&P 500 and the Nasdaq 100, up about 16% today. This company approaching a deadline, as you know, to either file a delayed 10K annual report. So we're going to watch for some headlines on the Bloomberg, or submit a plan to file the form to the Nasdaq in order to remain listed, I should say, on the exchange. Deadline is today, so we'll be watching for this. You know some of the concerns: damaging report from a short seller, U.S. Department of Justice probe. There's a lot going on in this one, but investors certainly bidding it up. Another one, Moderna, up about 7%. It was upgraded to buy from hold over at HSBC. Analysts saying the market isn't giving enough credit to the firm's pipeline. So an upgrade, but they did cut the price target to 58 from 82. Stock's down 60% year to date. New price target means you got some upside to this one. So again, Moderna finishing the day just under $40 a share. Tesla, this is your number 4 gainer in the S&P 500. It is, of course, leading self-driving stocks. This is members of President-elect Donald Trump's transition team, are seeking to ease federal framework for fully self-driving vehicles, which, of course, Tesla would be a beneficiary of. So investors moving into this one. Tesla shares up 5.5% today.
All right, you got the gainers, I got the decliners. I do want to start with NVIDIA. That company, of course, reporting after the bell on Wednesday. Shares falling today by 1.3%. The information out with the report that the company's asked its suppliers to change the design of the server racks for its new Blackwell GPUs due to an overheating problem. Maybe we'll get a little more information about that on Wednesday, maybe not. Should note that even with today's 1.3% decline, shares are still higher by 183% so far this year. So take that with however you will. Palantir shares falling today by 7%. They fell as much as 10.5% intraday, the worst intraday since August. Follows the record run that the company has had this year, and Friday's record high after the company said it would move later this month from the New York Stock Exchange to the Nasdaq. Even with today's decline, down about, or higher by about 260% so far this year. And finally, Uber shares fell about 5.4%. You heard Carol mention the report over the weekend from our team here at Bloomberg News about Tesla. Well, that's actually not so great news for companies like Uber and Lyft, because if Tesla was a beneficiary of a framework for fully self-driving vehicles from the federal government, then ride-hailers such as Uber and Lyft would face more competition with a network of robo-taxis from Tesla that could compete with these ride-hailers. Once again, Uber down by about 5.4% today.
True, but didn't Waymo and Uber expand a partnership or something? So maybe there's it's Lyft that also seems to be struggling on that way. All right, let's get to the bond market, guys, because I was talking about the fact that when I left 4.5 weeks ago, you got the 10-year yield was at like 3.6%. No more. We're about 4% for the 10-year yield. We're a little bit lower on the bond market today. A little bit of buying came in about halfway through the day. But just for some perspective, this has been a massive re-rating in just a few weeks, guys.
All right, let's get to some of the stories that have definitely piqued our interest on this Monday. And this one has to do with what economists are kind of grappling with in a second White House by Donald Trump and his team. And basically, one economist over at Nomura, Rob Superman, he is talking about adding Truth Social, right? We know that as journalists, that a lot of information got announced on Twitter last time around. And so we kind of have to watch what's going on. But they're also rethinking their models, hiring in teams that maybe they just need to kind of react differently and get ready. Yeah, analysts are scrambling to adapt. They're developing new models. They got more people hired to crunch thousands of lines of trade code and putting a lot more face time with nervous clients. The whole idea is to produce forecasts that will help traders, businesses, and governments navigate the new chaotic world. But you guys remember 2016 to 2020, just being glued to Twitter to
didn't we go through all this before? And isn't this kind of a losing battle?
We did.
I mean, some people get it right, but most people just get it wrong.
But you got to make models, right? As economists, that's what they do. So they got to figure out.
They have like 20 different models. That's the problem.
But just in case one policy goes one way doesn't mean the stocks go that way. For example,
well, that's the point.
With in the first Trump presidency, oil stocks didn't do well, and alternative energy stocks and solar stocks did well, which you thought would have been the opposite.
Yeah, that's what I'm saying.
All right.
I'm glad.
So add that to the models.
Thank you.
Moving on to a new model.
You know what? There's another story that we're watching, and that is about how schools, an elite private school in Miami, is building a $30 million endowment in order to provide teachers with a stipend, because all these schools, boarding schools, private schools in southern Florida, need to account for the fact that there's Wall Street South talent coming in, but they don't want to move there unless their kids have a place to go to school.
I'm fascinated by this story because we heard so many anecdotes, particularly when Ken Griffin announced they were going to move down there. A lot of these folks are going down there and they couldn't find, and they had to move back to New York. They were like, look, we just can't find a place for our kids. So until that's sorted out, it's going to be some growing pains here in Miami's development.
But isn't that kind of crazy that the endowment is going towards teachers because they can't afford to live there versus an endowment going towards, say, scholarships or something? Like, there's something fundamentally wrong with this model, no?
$11,000 a year in stipends to help these teachers with rent payments or mortgage payments.
Especially when you're charging $52,000 a year in tuition. The only thing I would say, it just speaks to the larger housing crisis.
Yes.
Like, you have all these great cities and things going on, and yet people can't afford to work
New Yorkers who send their kids to private school would think $52,000 a year.
It's a bargain.
That's a bargain. Oh, that's bargain. Yeah, I would love to be paying less than that. But also to this point too, and just on the Ken Griffin, there was another story too about him, building this empire down there. And there's apparently one big building that's kind of in the way of everything he wants to do. And apparently there's this mysterious buyer who's buying up all the individual units in this condo building. No one seems to know who it is, but we should just point out this building is in the way of building up that big sort of campus that Ken Griffin is trying to build.
Maybe they could put teachers in there to live, and then they would solve the housing problem.
So is that where the endowment money is going?
Maybe.
I like how you think, Tim Senevik, but that's not going to happen. You know that.
This
All right.
Is it Goliath?
This is like an extra layer, Carol, to your point of the housing crisis. Like this is like an added-on layer.
But this is happening all around the country, right? I mean, in Silicon Valley, teachers and firefighters and policemen don't have anywhere to live because houses are $2 million. So it's just happening wherever there's a gravitational pull.
Yeah, stop just, it's not just like building homes, right? Build affordable homes where people need them. Like, I think it comes down to that. All right, I am so happy to be back with our normal team. So, mwah. It's good
We're
to be
far
back
from
with
normal,
everybody.
but thank you.
We missed you, Alex. Well,
yeah, I have no idea what she's talking about.
Yeah, none of us are normal. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We will see you again, same time, same place tomorrow.
Our coverage does continue right here on Bloomberg Television. A closer look at the consumer with major retailers from Walmart to TJ Maxx set to report quarterly results this week. A breakdown of those expectations is coming up next right here on The Close on Bloomberg.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Vonnie Quinn. Let's take a look at where markets closed out the day. We did have the S&P down just fractionally from where we were at the heights of the session, but up 0.4% in general. Pretty bullish day, and obviously we had all of those targets being refreshed. Mike Wilson, the Uber bear, now seeing the S&P rising to 6,500 by the end of next year as his base case, but also at Goldman Sachs, the Peter Oppenheimer group of strategists saying that total global equity returns in dollar terms will be 10% through the end of 2025. So it's not just Morgan Stanley. So as you see, 58.93 on the S&P 500. We have the Nasdaq 100 up 0.7%. Plenty of gains all over the place there, including for Bakkt just a few minutes ago when we got that news that Donald Trump's company might be looking at buying it. The 10-year yield, 441.58. I just want to point to Matt Hornback of Morgan Stanley saying policy, sequencing and severity are going to be what matters for the 10-year yield.
It did get within spitting distance of 4.5% earlier.
Exactly, and could go back there again. And then the dollar index keeps strengthening, Scarlett. I know we're down a little bit today versus a basket of currencies, but 106.22 on DXY.
Yeah.
It's been a while.
It's been a tremendous move for the U.S. dollar since the election. Let's take a look at some of the big movers on the day as well. Super Micro finishing up about 16%. The deadline is for today for the server maker to either file a delayed 10K annual report or submit a plan to file the form to the Nasdaq in order to keep its listing on the exchange. This is a stock that's fallen about 84% from its high in March. Tesla gaining about almost 6% on a report that the president-elect's transition team told advisors they plan to prioritize this federal framework for self-driving vehicles. Tesla obviously a beneficiary because Elon Musk has been palling around with Donald Trump. And Amentum Holdings, this is a government contractor, and it is down along with other government contractors after Trump named Elon Musk and Vivek Ramaswamy to head up the Department of Government Efficiency, whose very aim is to reduce federal spending. So this was down for a sixth straight day, losing 32% over that period of time to a record low. Meantime, our top story this hour is the post-election rally over? The next leg really depends on how the president-elect moves forward with his economic and trade agenda, which will be signaled by his choice for the next Treasury Secretary. Bloomberg has learned it's no longer this two-man race between hedge fund billionaire Scott Bessent and Cantor Fitzgerald CEO Howard Lutnick. There are speculation that former Fed Governor Kevin Warsh and Apollo CEO Mark Rowan were in the mix, along with former Trade Ambassador Robert Lighthizer, as well as Senator Bill Hagerty. We continue to wait for the final announcement from the president-elect.
And it might even be split. Now we're hearing word that might be NEC, Scott Bessent, and Kevin Warsh Treasury. So we'll see how it continues. But President-elect's potential trade policies could put added pressure on U.S. retailers. That's something we do know. Barclays expects brands and vertical retailers, your Nikes and Gaps, to have the most exposure to tariffs because they directly import products from countries like China. Meanwhile, off-price retailers like TJX and Ross stores would have the least exposure to tariffs. Joining us now for more on all of this is Adrienne Yih, Managing Director and Senior Retail Analyst at Barclays. And Adrienne, thanks for joining. Very, very difficult to model this out when we have no idea where we're going to end up, even if we have some kind of an idea of where we'll be starting from. So what do? You put these retailers, brands and off-price retailers into groups and then look at where they're importing from. Is that it?
Yeah, so I think on the first level, what we take a look at is within the tariff structure, there's first cost, which we talked about, the brands and the vertical retailers. So those who are going to incur the initial cost when they go to manufacture. And then there's second cost, which would be multi-brand retailers like a Macy's, like a Dick's Sporting Goods. And then the ultimate kind of second cost would be off-price, who basically has negotiating power because they're helping you solve a problem. They're helping you move through that inventory. So that's kind of how we look at it from the cost side.
Adrienne, can companies do something like, for example, change how they report their exposure to China? Is that going to be doable in a new administration?
So they can't change how they report. But think about kind of the amount of product that they source in the country. Let's just say in China, they are sourcing, 15 or 20%, and they may have non-US, right? Asia and EMEA or Europe may be 15 or 20% of the business. They can take that product and they can redirect it to countries that are not inbounding. So the two components of what's going to cause the tariff are that it was manufactured in China and that it is also being imported into the United States. So they can't change the accounting of that, but they can redirect where it goes and where it's sold.
You point out that the retailers that are most vulnerable to tariffs include the brands like a Nike or a Ralph Lauren and vertical retailers like a Gap. But then you look at the retailers like Dick's Sporting Goods, for instance, or Nordstrom. They would take passing through costs from those merchants themselves, the suppliers, and then whether they pass it on to the consumer depends on what exactly, their ability to negotiate a deal with their supplier, or perhaps, who has more leverage in that relationship at any given time?
That's 100% correct, what you just said. Who has the negotiating power at any given point? For example, like a Dick's Sporting Goods, right now Hoka is super hot, On is super hot, right? So to the extent that there are certain shelf space, just like you would in a grocery retailer, there's shelf space that's limited for Dick's Sporting Goods. The ability to pass it through, no retailer is going to want to take it on the chin. Right. So anything that they are getting passed through on cost, it is going to come through to the consumer. And therein, where you really want to focus on are those brands, the strength of the brands, like I mentioned, Hoka and On, where you would pay full price.
Right. And again, this is why so many economists warn that these tariffs are inflationary. So when you look at the retailers that will be reporting, and of course, none of this is set yet because we don't know what the tariffs would look like, it very much feels like the golden days of an expanding gross margin are largely over.
They are absolutely over, notwithstanding the tariff. So that's just sort of like the cherry on top. If you think about what's been happening, the action of cleaning up all of that excess inventory reduced markdowns, right? Reduced clearance activity. So that has flown through and come through the vast majority of U.S. retail P&Ls, profit and loss statements, through the gross margin. Most of the companies entered this year sitting at peak merchandise margins. And recall also that freight was a tailwind up through the rest of this year and will now turn into a headwind on container and shipping costs that have been spiking right through the back half of the year. Those will then turn into cost pressures as we go into fiscal or calendar 2025 as well.
Adrienne, you cover everything from Canada Goose to Nike to Bath and Body Works, some of the luxury players as well, Tapestry, Capri, yet you're forecasting weak sales for the holiday period. Why is that when the consumer does seem to be holding up, at least in the data?
So what's interesting is that in the data, the comps or the sales growth is actually holding up. And what we noticed with our promotional research is that the promotions were pulled up not from Black Friday, not to early November, which we used to call Black November, not to October, which we called Black October, but to the last 2 weeks of September, right, to get in front of this Amazon Prime Day that's been in its third year. So what happens in holidays, when those dollars, those holiday spending wallet dollars are spent, right, when you buy those gifts, you don't create 10 more gifts to buy, you're done. And really what you see is a shifting of these dollars. So while the comp performance and the sales performance is positive, it will probably be on the positive low single digit side for holiday. Two things. We think that the sales are being pulled up from the fourth quarter into the third quarter. And it is at the expense of merchandise margins, which we just talked about with Scarlett about those being under pressure. You're buying the comp, which is promoting to get that action out of the consumer.
All right. Sounds like it might be a tricky holiday season then for those retailers. Adrienne, always appreciate your joining us today. Adrienne Yih over at Barclays. Let's segue now to the top three, where we name drop the people driving some of the day's most talked about stories. And first up, we're talking about luxury retail. More executive changes at Kering for two of its luxury brands. Cedric Charbit is moving from Balenciaga to lead Yves Saint Laurent in January. I'm trying to say these names best I can.
Beautiful. Balenciaga, darling.
Gianfranco Giangeli, currently the chief commercial officer for YSL, will now head up Balenciaga.
I'm just going from the movie's pronunciation. I have no idea. But it's interesting because both came from the opposite brand. So one came from Saint Laurent, one came from Balenciaga, and now they're swapping. So obviously they've been doing a great job. And the interesting thing is that it is the Gucci brand that's actually flailing more than those two. So will they be able to sort of rise all of the brands at Kering? We'll see.
Yeah.
One I was watching was Sam Altman, who's going to be co-chairing San Francisco Mayor-elect Daniel Lurie's transition team. So he's following through on his promise. This is the Levi Strauss fortune heir. He's following through on his promise to get the tech company more involved. And he has been involved in what is essentially the Robin Hood Foundation of San Francisco. That's what he's been running. So he knows how to help with the homelessness situation. And perhaps Sam Altman now will bring in some other people who can help along with him.
Yeah, Sam Altman along with Ned Siegel, the former CFO of Twitter, also a co-chair of this transition team. All right, let's also talk about Beyonce. The Grammy-winning singer will headline the halftime show during Netflix's live broadcast of one of the two NFL games on Christmas Day. She's going to perform during the Ravens versus Texans game in Houston.
I know what you're going to say next.
What am I going to say?
There's another game on, and who's going to perform at that halftime?
Exactly.
And who's playing in that game?
Tell me.
The Chiefs. So who might play?
Well, we haven't heard any announcement yet about whether Taylor Swift is going to be busy that day or not.
No, we haven't. But I was looking at who else comes from Pittsburgh, and Christina Aguilera is from there. So.
Oh, different era though.
Yeah, true. This is true.
Different era from Taylor Swift, at least, it feels like.
That is very, very true.
Different levels of stardom.
It does feel like Netflix is hopefully going to try and get better at these live streaming events, because you don't want to have happen what happened during the fight, the famous fight, Tyson-Paul fight on Saturday night, and for,
so true.
Buffering to happen. Did you watch?
Yeah. No, I did not watch, but interestingly, I was watching something else on Netflix, and I saw that it was still live, and it's because they didn't actually get to the main card until really late.
Well, yeah, the Katie Taylor fight right before it was very good.
See,
she won.
I guess
I'm
you
not
watched.
sure she was really deserving.
They had to make sure it lasted a long time. So, well, Netflix clearly has its work cut out for it, because social media lit up with user experience complaints, as Vonnie just mentioned. A lot of viewers citing glitches in streaming, poor quality visuals during the Jake Paul Mike Tyson card. Netflix has been investing in its live event capabilities for all these mega spectacles, like the Mike Tyson Jake Paul match, after earlier live streaming missteps, including the Love is Blind reunion debacle. So here with how the streaming giant can pull it all together ahead of its Christmas Day twofer is Mark Douglas, CEO and founder of Mountain. Mark, did you watch Netflix on Friday night?
I attempted to. I did watch it, but I experienced all the problems that people complained about, and watched problems like, headsets not working for Vanda Holyfield, mic not working for the owner of the Dallas Cowboys. So it was technical glitches throughout, including getting the actual fight.
So from the point of view of an advertiser, what was the takeaway? Was it a disappointment, or was it like, okay, there's stuff to work on, but we can work with this?
Well, what everyone has to remember is Netflix has this incredible ability to turn anything into a big event. I don't think as a pay-per-view event, this was going to pull the numbers it did. Peaked at, I think, 65 million people. And how many people wanted to watch it, but essentially couldn't get the stream or just gave up. And so they have this ability to basically just take, like a comedy show and turn it into like an incredibly large live event. I think that's unmatched. So, that I think overall made a big success for them and for advertisers, but they have to get through, being able to do these things live if they're going to sign up for live.
So, Mark, what's the solution? Because it feels like it's just, quote unquote, a technological problem, right? Shouldn't there be an engineer that can fix this, or a server farm somewhere?
Yeah, I think this might have been the moment where they realize, I mean, if you look at other networks like Disney does this, has tons of sports and does this all day long without a problem. Every Saturday, every Sunday, they're doing major live sports events, college football, and other games and things like that. And so there are solutions, but I think as a company in the tech industry, at my heart, I'm a coding engineer, and I was talking to other engineers while the event was going live, and we were speculating what the problem was. And ultimately, it's capacity. Ultimately, you got to spend dollars and have the software to basically be able to respond to your ability basically to get everyone who tunes into Netflix might want to watch that event right then and there, and they have to respond to it. They will fix it, and I think this might have been the moment where they bring in the cavalry, so to say, to do it.
On the part of the consumer, is something like this enough? Is a bad experience of watching something live enough for them to cancel their subscription, or will they start thinking, oh, maybe I need to upgrade my computer and my download speeds?
Yeah, no, I mean, I think at the end of the day, Netflix's one of their biggest strengths is they kind of, and I think this is borne out through data, they're the first place people go to look for new content. And that ability, that's what their core value is in some respects. And what you're seeing is it translating into making this like it was the most watched female fight in history, or female sports event, I think, in history. Yeah. And it's because of, one, people were genuinely interested in watching this, myself included. Yeah. But it's two, you turn on your TV and you go see what's on Netflix, and if it's the biggest fight, female fight in history, and Mike Tyson and Jake Paul, you're gonna stay tuned in and watch it. And I don't think, I don't think that advantage is hard to top right now. They're doing, and advertisers, like I said, advertisers are not going to turn away from it. Brands or consumers are not going to turn away from it either.
So, Mark, what's the learnings here for Netflix as it gets ready to stream the 2 NFL games on Christmas Day? I mean, are viewers going to be as forgiving about glitches during the NFL games as they were about the Tyson-Paul fight?
Well, I'm not sure. If I was the NFL, I'd be making sure right now there are clauses in this contract that, they start, if you want to give them incentives, start charging them for the glitches, like the NFL, or basically say, we're not going to make these games available to you anymore. So I think the stakes are going to go up. And Jake Paul, Mike Tyson were practice round for the real stakes, which is, do you really, truly want the ability to showcase the NFL on Netflix? Or even WWE next year, which is, I think, going to have the same effect at WWE. I certainly would not wake up on a Thursday evening and go, let me watch WWE. But if I turn on Netflix and is watching, I'm probably going to stay and watch it live. So that's their superpower right now in streaming, and they're going to have to step up and live up to it. I think they will. They have a really, really smart tech team, and by the way, their technical team has a technical blog. So I think a lot of engineers, myself included, are really waiting for the post-mortem on what actually happened. We have our objective.
Mark, thank you so much. Mark Douglas, CEO of Mountain. And Scarlett, I'm just curious, on Christmas Day, will you spend your time watching 2?
I mean, I think I'll have to, just to see the spectacle that is. And of course, the halftime show hosted by Beyonce.
They're not going to put them back to back, right? Or
no, I don't
You'll be able to watch both.
I'm guessing it'll be one after the other.
Has to be. All right, well, we'll be right back, so you can continue watching us. This is Bloomberg. The 2024 G20 summit starts today with some of the world's largest economies gathering in one room to discuss global trade and climate goals. The wars in both Ukraine and Israel looming over the summit, as well as a generation of the transition of power happening in Washington, D.C. Joining us now is Bloomberg's David Gura. He's live on the ground in Rio, Brazil. So, David, obviously there are some new faces there already, but there's clearly going to be some anticipation for the next G20. What can President Biden get done right now this week, given that his agenda is obviously going to be blown up for the next time?
Yeah, he's on a bit of a farewell tour here. This is the last international summit that he's going to be a part of, and we saw him at the APEC summit just a few days ago, sitting down with his Chinese counterpart, Xi Jinping, for a conversation about their personal relationship and the relationship between the U.S. and China. And after that, he stressed how much progress he feels he and his administration have made improving that from the 4 years before that when Donald Trump was the president, and those communications really froze up, and there wasn't much dialogue between the two nations, and there was a lot of heated rhetoric. So we've seen him today at this summit meeting with a lot of his old friends, just to put it bluntly. He spent some time talking to Prime Minister Justin Trudeau, talked to the new president of Mexico, Claudia Sheinbaum, as well. So he's had a handful of these bilateral meetings, but we really see a president here whose role is clearly diminished for what you just described, Vonnie. That is, he has limited power going forward here. He can try to, for instance, make sure that Ukraine has the ammunition and arms it needs to continue fighting, but he's well aware of the fact that in 2 months' time he's going to have absolutely no control over that conflict and America's role in it. So, again, he's laying foundation for things like climate, for things like these conflicts that are taking place in the world, but there's just a great deal of uncertainty about what happens next in terms of where the policies go from there.
Absolutely, and I guess all of that is kind of encapsulated in the G20 class photo where he somehow didn't make the photo along with a bunch of other people. Very symbolic. What about Brazil's Lula and China's Xi Jinping? Where do they stand in this G20, especially with Lula hosting and Xi Jinping knowing that he's going to be the connective thread from Biden to Trump?
Well, start by saying they're going to retake that photograph. President Biden was absent, so is Prime Minister Trudeau, and Prime Minister Meloni was absent as well. So they're going to retake it at dinner time tonight, we gather. But let me take both of those officials in kind, starting with Lula, who, yes, is the host of this event. He had a great hand in sort of shaping what's on the agenda, the official agenda here, and he's been having a host of bilateral meetings. We've kind of detected the animosity we've come to expect between him and President Javier Milei of Argentina. That's been kind of on display as we've watched the body language of those two leaders, for instance, when they were taking that photograph earlier today. Xi Jinping comes here with a lot of momentum. He is a stalwart, of course. He's been in office for a long time, and he's not going anywhere. So he, too, has been meeting on the sidelines with the leaders of a lot of different countries. He met with Claudia Sheinbaum of Mexico, for instance. He is introducing himself to those new faces and projecting a level of sort of calm leadership, stable leadership going forward here. As we heard at the APEC summit after that conversation that he had with President Biden, indicating that it's constructive for China to have good relationships with all of the nations who are here today, but there are red lines in place when it comes to democracy, when it comes to the economy, that if countries cross them, China will be ready and willing to fight back.
All right, David Gura, fantastic reporting. David reporting live from Rio, where the G20 is taking place. Let's turn back now to the U.S., where President-elect Donald Trump is narrowing down his cabinet picks. Bloomberg has learned that his transition team is considering pairing Kevin Warsh, a former Fed governor, in the Treasury Secretary role with hedge fund manager Scott Bessent as director of the White House's National Economic Council. Joining us now with his perspective on how this could all play out is Brian Gardner. Brian is Chief Washington Policy Strategist at Stifel. So, Brian, how do you think this through? I mean, there have been a couple of names in the running for Treasury Secretary, but at the end of the day, President-elect Trump is going to make all the calls. And does it really matter who is head of the NEC versus who is Treasury Secretary?
So on Trump, you kind of nailed it, right? You don't know because no one knows exactly what Trump is thinking. So we can have the parlor games about who's up, who's on the list, who's off the list. But at the end of the day, Trump's going to make up his own mind. And he likes this chaos. He likes the battle that's going on within the circle. So that's all to his, that's very on brand for him. Mm-hmm. In terms of Treasury or NEC, they both have their power bases, right? Treasury has legal authorities and especially on the international side, the NEC can pull a lot of levers and influence folks from inside the White House. So they're both powerful, but in different ways. And whoever gets the two jobs is going to have the ability to influence policy in significant and material ways. Yeah, so that is why Wall Street is watching so carefully. You said that there's a lot that's still uncertain, so of course we'll have to wait to see how it all transpires. But one thing that probably is certain is that we're not going to have much of a dispute over the budget or the debt ceiling, are we? I mean, you have a Republican-controlled House, Senate, and executive branch, and they want to make things, smooth for the president-elect. They want to make things smooth for the president-elect, so that it looks like we're going to punt this issue into early 2025. So we'll probably get a continuing resolution that funds the government into March and let the new administration deal with it. There are pros and cons with that because now a new administration, instead of dealing with a clean slate, is going to have to clean up the mess from the previous year. The debt ceiling is probably punted well into 2025 or into 2025 at some point. The suspension ends on January 1. There are always extraordinary measures that Treasury can manage through, but it'll be up to the Trump administration then to decide what next steps are. And despite unified majorities of Congress, there's not unified control of Congress. We're going to have a House that is deeply divided, 221, give or take a seat, Republicans. And as we've seen over the last year, there are a number of Republican House members who will defect on any given issue. We're going to see that in the tax issue. We're going to see it on the debt ceiling. We're going to see it on the budget. And it's not going to be easy to pass legislation, even though Republicans control all parts of government.
Brian, how devoted is President-elect Trump to the market continuing to go up? We know that he likes that, obviously, and the New York Times report at the weekend obviously suggested that he was, preoccupied by this. He doesn't want the market to turn down. But some of his policies, potential mass deportations, for example, or some of the more inflationary policies might be market negative. Would his Treasury Secretary have to calibrate that?
Yeah, and I think that's playing into the drama that we're seeing in picking a Treasury Secretary, especially on the trade side. In the last administration, former Secretary Steve Mnuchin was rumored to be less sympathetic and kind of opposed widespread tariffs from within the administration. Trump didn't like that a whole lot. At the same time, per your point, he is cognizant and pays attention to the markets. And if markets were to start to turn down, and we saw some volatility in his first term surrounding tariffs, I think he does pay attention to that. So at Treasury, I think he's looking for somebody that can be have good relations with Wall Street, be attentive to Wall Street, but still do his bidding at the same time on trade and tariffs. So it's threading a bit of a needle in terms of who he wants and the profile that he wants for the Secretary of the Treasury.
And Treasury is obviously in charge of currency policy as well, which will also take a strong hand, given that some other countries may need or want to try to, at least, at face value, devalue a little bit in order to deal with these tariffs. What happens to the dollar if it's Bessent versus Warsh, who we know is a hawk, at least would be on the Fed?
It's a real conundrum for the incoming administration because Donald Trump and people that have been around him for a long time favor a weaker dollar policy. At least they say that's what they do. But at the same time, the irony is, as post-election, we have a stronger dollar, and that runs counter to what Trump wants. Now, I don't think we're going to get Treasury intervention in the currency markets. I think that's a bridge too far, even for the Trump folks. But it is definitely going to play into the trade debate. If tariffs are imposed and countries try to devalue their currencies, we're going to start to get in this spiral of tit for tat, and currencies will become a weapon in the next administration on both sides.
It's happened before, and so we can look for that to happen again. Brian, always appreciate your joining us. Brian Gardner is Chief Washington Policy Strategist over at Stifel. And speaking of Treasury Secretary, no announcement on who it might be yet. I know that's one of the things that it feels like everyone on Wall Street is waiting for. You look at what happened in the markets today, and stocks did bounce back from a down week last week, up 0.4%. Treasuries halted their sell-off, yields coming in a bit here, but the 10-year yield did get within spitting distance of 4.5%, which was resistance last week.
And it might get there yet.
It might get there yet. The dollar's rally has run, and I've seen, you just talked about the dollar, but taking a bit of a pause right now. We'll continue to keep an eye on those developments. This is The Close on Bloomberg. Attention Attention all Sassenachs. I recently spoke with one of the lead actors of the cult show Outlander, Sam Heughan, about a new role that he has taken on, and it is that of the role of Sassenach Spirits' founder. He joined us to discuss how Outlander, the show, has influenced his latest business venture and how his Scottish heritage inspired him to start this new line of spirits. Take a listen.
Obviously, I'm a proud Scotsman. Whilst returning to Scotland to work on my TV show Outlander, I fell in love with the landscape, with the culture and the heritage there. And of course, its most famous product, which is obviously Scotch whisky. Whenever I was traveling around the world, as soon as I would have a single malt whisky, it would take me back to Scotland. There's so much memories and emotions tied up with whisky. And I wanted to create my own that was sort of an expression of what I love in Scotch whisky.
Did you go in search of a partner, or did someone in the industry approach you? I'm curious about your funding and how that all came together.
Yeah, we're all self-funded, self-designed, from every element, from the bottle to obviously the juice. But I was approached by a number of different brands to sort of white label, should we say, to put my face to their label. But I really wanted to create something that was very personal. So we went all around Scotland, different distilleries, trying different products. And I was very inspired actually by a lot of Asian blends, which I felt Scotland obviously it does blended whiskey, but I really love these premium, very approachable blends that they do in Japan or Vietnamese whiskey. So I wanted to do something that was kind of in the same world.
So is the eventual goal to perhaps sell to a bigger company, or to take this as far as you can on your own as an independent brand?
Firstly, as I said, it's very personal, and I have so much tied up in this. I dedicate a lot of my time to it, so it would be very hard for me to sell. We want to see where we can go. I really love the creativity of it. Obviously, I'm an actor, I'm a businessman, but I love creating spirits. We also have a gin. We've done a tequila collaboration, and I just think there's so much more to explore.
You've got a built-in market, obviously, because you have fans of the show that will gravitate towards anything that you are part of. What's the challenge of making this brand, your drinks, appealing to the connoisseurs, the whiskey Scotch connoisseurs out there? Yeah, that's a really good question. And celebrity brands have got a bit of a dirty word, I think, in the alcohol business. But we actually went out of our way to be taken out of that branding, that category. I'm a huge fan of whiskey and of Scottish whiskey especially. So we do everything we can to appeal to connoisseurs, to people that really know Scotch whiskey, and I think we've proved it with all of the awards that we've won. And speaking of awards, you recently won awards in San Francisco, your whiskey and gin winning gold. What's different about appealing to the U.S. market? Because I know you've won awards in the UK and Singapore as well. Yeah, the Singapore Spirit Awards, San Francisco Spirit Awards, we won Best in Class. That's the best overall blended Scotch whiskey. We've won multiple double gold medals and now a platinum for the whiskey. I think these accolades are really important, but it all comes back to what I love about whiskey, and it's such a personal thing. So it's always that moment where you think, are people going to like this? I've put my heart and soul into this, and I guess the proof is in the tasting. So I want to come back to the word Sassenach. It's still not clear whether this is an insult or a term of endearment. Outlander fans know it as the nickname that Jamie gives Claire, who's an English person. How has the meaning of the word changed with the book and the show? And how do you intend for your spirits to help expand the reach of this word? Yeah, it's a really good question. Sassenach was, in times gone by, a derogatory word. It was for an outsider, an English person. I am partly Sassenach myself. My mum is English. There you go. We moved to Scotland just before I was born, and so there's a part of me in that. But also, actually, Sassenach, because of the show, has become a word of endearment. And I think Scotland is a very forward-thinking country. We're very, quite socialist. We look after each other, and we're very welcoming now, I think. And so, therefore, I think everyone is a Sassenach. Everyone is an outsider, but you're all welcome to join us. I think about how Outlander has sparked a global obsession with Scotland, the country, right? There are tours devoted to visiting the show's filming locations. The show has been an important contributor to Scotland's economy. How does your drinks business build on that? That's right. Yeah, Scotland. I mean, some locations that we filmed at have seen an increase of like 200% in terms of revenue, in terms of visitor numbers. And I just want to lean into that. I think Scotland has so much to offer in terms of, obviously the landscapes and the culture and the history, but the produce, not just obviously Scotch whiskey, some of the finest gins in the world, salmon, some of the produce, venison. So we've got incredible chefs there. So there's so much to draw upon, and I think everyone around the world
they identify with Scotland. Scotland has such a rich character.
And you have gin and tequila as well as part of Sassenach Spirits.
We do. I recently created our wild Scottish gin. It's from the southwest of Scotland where I'm born. So all the botanicals are Scottish. They have such an emotional connection to each one. It's also distilled in the southwest of Scotland, Dumfries and Galloway. And then we also did a collaboration with an amazing tequila brand, a third generation master distiller. They'd never done a collaboration before, but we were in tequila in Jalisco, and we made friends with Tony Sayas there. He was drinking our whiskey. We were drinking his tequila, and we realized there's so much in common with Scots and with Mexicans in terms of their culture, their storytelling, and of course their love for great spirits.
Right now, acting is your day job and Sassenach Spirits is kind of your side hustle. Will this become your main gig after a while?
Oh, well, I don't know. I mean, it's certainly one of my big passions, you know, and I think it's another creative outlet. And I think as an actor, sometimes, you know, you need these other ways to inspire you. And I never thought I would be a businessman, but actually being a businessman is extremely creative. So, yeah, it's just another facet, another part of the skill set that I guess I'm developing.
All right, thanks again to Sam Heughan for joining us, the founder of Sassenach Spirits. And I say joining us, but really he joined you, Scarlett.
I like the way you said
that's
that,
okay.
Sassenach,
That's really
the proper
fine.
way, right?
Well, you just have to roll your CHs a little bit, like, you know,
Yeah.
Sassenach.
Well, I did it totally the wrong way when I was talking.
No, you did it beautifully, and I'm so impressed by how much you know about Scotland. Not that I know a whole lot about Scotland.
Well, I'm embarrassed to say that Outlander was kind of the window into the Scottish world for me. So
They did do it very well, though. And there was an Irish person in that, too, Katrina Balfe.
There you go.
I'm going to Scarlett for my next TV recommendation. Still ahead, what investors
to give you.
need to watch over the next 24 hours. This is Bloomberg. Confidence among U.S. home builders hit a 7-month high in November, driven by strong sales and expectations and post-election optimism about regulatory easing under the Trump administration. Joining us now is Bloomberg's Michael Sasso. So, Michael, confidence went up for all of those reasons. Has it anything to do with Fed interest rate cuts, or is that sort of a wholly separate issue for, you know, home buyers as opposed to builders?
Well, it could. Honestly, what we've seen with mortgage rates is they've actually been heading up lately, which is not the right direction. So I think there's an expectation among builders that rates will fall next year, but you know that could be a misplaced expectation. Mortgage rates are expected to fall very, very slowly. They're currently over 6.8% for a 30-year mortgage. They may not drop down, may only drop down to about 5.9% by year end next year.
Yeah, it feels like people are going to have to just get accustomed to this new higher level of mortgage rates overall. So that was the first data point that is tied to housing this week. We also get housing starts tomorrow. And I think about the October jobs report and how disrupted that was by weather events, the hurricane, and not to mention strikes. Is housing starts going to be affected by the hurricane quite a bit?
I would think so. I mean, we'll have to see tomorrow morning. The South is the largest region. It has by far the largest housing starts in the country. So one would expect that housing starts overall would be heavily infected by that. So you just take that in mind as the numbers come out tomorrow.
So, Michael, builders are obviously looking forward to, you know, fewer regulations potentially, but President Trump hasn't said that much about at least housing regulations. He did, however, try to match the Kamala Harris $25,000 home credit for first-time buyers and so on. Do we anticipate hearing anything more about a housing policy before January?
I haven't heard that. I'm pretty much focused more on the indicators. I would think so. However, I think he has mentioned, you know, vaguely opening up some federal lands as well as cutting regulations. Although, as you said, he's been fairly vague about that. But you know, with all the people that he's putting into place, I would think something would likely be coming out shortly.
Yeah, but probably not before the existing home sales numbers do come out. And those are the bigger part of the housing stock as opposed to new home sales. What are we looking for there, Michael, when we expect the existing home sales numbers to come out?
Yeah, existing home sales will come out on Thursday. And honestly, I don't think you're going to see a whole lot. Mortgage, you know, those are heavily dependent on mortgage rates, and mortgage rates being as high as they are, People are just kind of are not moving. You know, they're shy about. They may have a 6.2 or 2.6.
Yeah, there you
or
go.
2.7% rate, and they're just not willing to part with it. And until those rates start coming down, I'm not sure what's going to get them moving.
All right, so we'll continue to watch that. But as you mentioned, those mortgage rates are staying pretty persistently high. Michael Sasso, who covers the housing data for us on the econ team, really appreciate it. All right, so as we look ahead to what else we're watching tomorrow, there are still earnings. And of course, retailers begin reporting results, starting with the biggest retailer, Walmart.
Exactly, and we get Lowe's tomorrow as well, so we'll have another sort of look at what kind of things the consumers are buying, and obviously consumer discretionary being up, 1% as a group today, or 0.9%. That was quite the reveal. It would be nice to see the consumer continue to do well, and I think that's definitely one of the pillars that the more bullish economists are holding their hat on.
And of course, at 8:30 a.m. we get housing starts and building permits, as Michael Sasso just told us. It might be disrupted by the hurricanes, especially in the south. We're looking for a 1.5% drop, according to economists surveyed by Bloomberg. Kansas City Fed President Jeff Schmidt will be speaking, so Fed talk again.
More Fed talk, and then the G20 summit in Brazil continues. I'm sure overnight we'll get that family photo, that second family photo, because the first family photo never works, does it? Does it in your house?
Everyone needs to do a retake. All right, that does it for us. Balance of Power is up next. Have a great evening, everyone. This is Bloomberg.